Hey everyone, and thanks for jumping back into the Cryptoverse. We are going to go live here and follow the markets and see what is happening over in the Cryptoverse. So here we are. So Bitcoin is now at around 87K. It has dropped below sort of the prior range lows. It also, at the current time, is below the bull market support band, right? Now, this isn't the first time this has happened this cycle. We've seen it happen at other times as well. For instance, it happened in Q3 of 2024 and it happened in Q3 of 2023. You'll also notice there were brief periods where it went below it right there and maybe a wick below it right here in March. But for the most part, Bitcoin has spent a lot of its time above the bull market support band for the last couple of years. But in Q3, it would go below it. So I guess this is the first time this cycle, with the exception of say June of 2023, and maybe this wick right here, that it's below the bull market support band during a time that is not the third quarter of the year. So we sort of talked about some of these ideas about, like, why the market sort of de-risk after these major milestones. And one of the things I've mentioned before is that when the froth rises to the top, right, when everyone's basically losing their money on meme coin rug pulls and whatnot, the market has a way, unfortunately, of punishing us, right? And it makes sense. We lose our way, and during this sort of this 2-week chop, market participants end up focusing on meme coins, and a lot of them just lose their money to all these rug pulls. And now you even had presidents launching meme coins. And so then the question, I guess, is well, when could Bitcoin find some relief? There's an interesting pattern that we actually went through very much in detail. Um, just a couple of days ago, and it was actually looking on the Ethereum chart. And what's interesting about the Ethereum chart is that you had this capitulation right here, and then you get a 2-week rally, right? A capitulation right here, and then a 2-week rally, and then you get 2 weeks of going down, right? 2 weeks of going down. Arguably, ETH is in its first week. Now, last week, right? Last week when this was happening, you'll remember a lot of people were calling for alt season and sort of misinterpreting monetary policy in Asia to justify why their altcoins were going to do well. But in reality, this was just that was just a narrative, just like that was just a narrative. And you could argue that the pattern is playing out, right? You get a capitulation wick, you get a knee-jerk reaction, a knee-jerk move back up for a couple of weeks, and then you get a 2-week drop. Now, the same thing sort of happened back over here at this capitulation wick. This candle right there was technically red, but you could argue the price, generally speaking, was moving up for a couple of weeks. And then after ETH spent 2 weeks going up, it then spent 2 to 3 weeks going down, right? I guess the actual higher low was put in that first week, whereas over here it was put in the second week. But again, it all goes back to the same idea that the pattern in general has repeated itself, right? A capitulation wick 1 to 2 weeks after the Bank of Japan raises rates. We saw that in April after the BOJ raised rates in March. We saw it in August after the BOJ raised rates in July, and then we saw this in February after the Bank of Japan raised rates in January. So right now, this pattern is just repeating basically the exact same pattern that we saw, right? It's repeating the exact same pattern. And so if that pattern continues to repeat, right? If it continues to sort of follow that, then the suggestion would be that you might see the markets find some support within the next couple of weeks, right? It might take a little while. Here, obviously, ETH went lower for basically another week and a half from this point, right? So it would entail going lower. And so then it sort of raises the question, well, what's going to happen? What's going to happen next week, right? That could turn, that could sort of at least temporarily right the course on the ship, right the ship. Um, and it might just be the labor market data, right? It could simply be the release of the labor market data that might cause, sort of a different trend in the market. Obviously, there's a lot of discussions about fire, people being laid off at the federal level. And if the labor market report comes out and it's not as bad as people think, then it might lead to, some renewed interest in the idea that it's not yet happening. Um, but I did think that these patterns were really interesting. And I guess one of the issues that I could see arising for Ethereum specifically is that this weakness was found in sort of March and April, and it was able to then go back up in May, right around the time of the launch of the spot ETF. This weakness was found in July, and it took longer for it to for ETH to recover back above the bull marks per pound, right? It took longer for it to recover, and you could argue that it took longer because of the time of the year, right? It was in the summer, it was not in a great time of the year, therefore it took longer. If ETH has to go through this pattern, right, up to down to up for a while, down, right? If it has to go up through that pattern, then by the time you run the course on that, right, that by the time you run that course, that's 14 weeks from the week before capitulation, right? That essentially puts you out in May, which is not getting into the favorable time of the year. But I would still look at this as it's always possible that you finally see that move. But here's the thing, right? Here's the thing about ETH. It's been holding this trend line as support, right, on a linear scale for a very long time, for a very long time. And, you know, I I'm sort of under the impression that until this trend line actually breaks, ETH Bitcoin could go lower, right? So I think that ETH Bitcoin can convincingly bottom after this trend line breaks. That's essentially what happened last cycle, right? I mean, we saw Ethereum trending up, and then ETH Bitcoin bottomed after this trend line finally broke, and then ETH Bitcoin bottomed right here, right? That's where ETH Bitcoin bottomed. Now, obviously, ETH USD went down after that, but that's ultimately where ETH bottomed out against Bitcoin, was after ETH USD fell below the higher low support level, right? And so I wonder if we're basically just seeing the same thing happen this cycle, just on a much grander scale. Now, it might seem weird still comparing this cycle to 2019, but the justification for it, right? And I don't really think it's that far fetched at all, but the justification for it is that monetary policy continues to remain similar to that time in the market. If you look at total assets held by the Federal Reserve, quantitative tightening this cycle has continued on far longer than it did last cycle. And you have to wonder, right? You have to wonder if that's the reason why the altcoin market is struggling so much. And I'm under the impression that it is a lot like that, right? If you go over and you look at the advanced decline index, right? This is something we've talked about a lot, but if you look at the advanced decline index for the top 100 cryptocurrencies, one of the things you'll notice is that it's been in a downtrend really since the end of 2021. Since November of 2021, this metric has just simply been in a downtrend. And the last time it was in a really long downtrend like that was back over here in 2018 during quantitative tightening. And the ADI bottomed in January of 2020, about 3 to 4 months after quantitative tightening ended, and about 3 to 4 months after quantitative easing began. And so a lot of people are confused because they're like, well, why do altcoins keep struggling so much when Bitcoin is still at 86K, right? I mean, obviously 86K feels kind of bad to a lot of people right now, but I mean, it was at this price a few months ago. why are altcoins so much lower, right? If you look at the altcoin market, you'll notice that they've actually given back a lot more of the gains than Bitcoin has. For instance, as measured from the high, altcoins are down. Well, they might be about the same because Bitcoin went higher in in January. Altcoins put in their high here in December. Bitcoin put in a higher high in January, but alts are down about 31%. Not sure exactly what Bitcoin's down. It's probably around the same amount, might be a little different, about 20%. Not a huge difference, but you can see that Bitcoin continues to outperform the altcoin market regardless of the direction of Bitcoin USD. So remember, we also had a similar move over here, right? Where you kind of had, you know, a couple of tops, and then on the second drop, you went below the bull market support band, and then you got a rally, and then you got another drop, right? And so that has to be sort of in the the forefront of your mind that this move here bottomed on a labor market release. So if we're going to see relief in the cryptoverse, my guess is that it wouldn't happen until next week, right? And it would only be if the labor market release is not so bad. And if it's not so bad, then you could probably see something very similar happen. In which case, if that happens and you go back over to the ETH chart, it would likely just follow the same pattern, right? Where it gets sort of a 2 week drop and then trends back up for a couple of weeks, maybe drops again, something like that. Um, so I do think that there is some, there's some interesting ways to look at that. And also, the other idea too is that it's not completely off the table to test the 2024 high. It's also not completely off the table to test that. What I would argue is this, there's been obviously a lot of discussion as to whether this is a right translated cycle or a left translated cycle. I would argue there's still hope for a right translated cycle as long as Bitcoin stays above 73K, right? As long as it's above the 2024 high, there's still some argument to be made for a right translated cycle. The reason I say that is because if you look at what happened in 2017, Bitcoin at one point did test the 2016 high, right? It had a 30% drop, about a 35% drop, and it tested the high from the prior year, from the summer of 2016. And when Bitcoin got that drop, it actually was about a 30 to 35% drop. So if Bitcoin does get a 30 to 35% drop from the high, that would actually put you right at the 2016 high, right? Which is right around where Bitcoin dropped in 2017, right? So it had a 30% drop. It tested the high from the prior year. Bitcoin went on to have a normal right translated cycle. So my argument is pretty simple. It's not about predicting what's going to happen. It's about understanding really what the market is telling you. Okay. Now, for now, there still is some justification for that idea. If the drop goes below 73K, if it instead drops down here to 63K, right? If it drops another 10K lower to 63, price label, back test the trend line, right? If it ends up being 63K instead of 73K, then I think it would the likelihood of a left translated cycle would go up significantly, right? Significantly in that. And the good news is that I don't. I mean, if that were to happen, I still think there would be a macro lower high in Q3. Okay, and we'll go through that idea. But I think that there would still be a rally later this year. It would just resolve into a lower high. So right now, you know, it's a tough call. Um, I don't know if it's a left translated cycle. I'm sure that this is what a left translated cycle would feel like. Everyone buying presidential meme coins at the top. What better narrative than that for a left translated cycle to top out? But there still is no guarantee that it is. If Bitcoin finds support above the 2024 high, then I think you could still make the case for a right translated cycle. If it drops back to 63K and back tests this trend line and gives back all of its post-election result gains, which is already what some of the altcoins have done. For instance, if you go look at Solana, Solana has already given back all of its post-election result gains, right? You know, the election result was right there. Solana went up and it just gave it all back. Okay. So if that, and you can see that pattern that we just mentioned for Bitcoin is arguably playing out on Solana right now. You see that? Now, I've said before, I actually think that the Sol Bitcoin pair is cooked for the cycle at this point. I don't, there's probably going to be rallies that resolve to lower highs, but Sol Bitcoin, it looks like it's done for this cycle. Because, I mean, look at this. It's a distribution phase, a breakdown, a lower high. It's the exact same thing that ETH Bitcoin did, right? You had a higher low structure, a breakdown, a lower high, and then it just bleeds back down. But, you know, that doesn't mean you should panic. There's probably going to be some lower highs by Sol Bitcoin. But when you look at charts like this, you know, I know a lot of people got upset when I called for this distribution phase because they were looking at they were misinterpreting monetary policy in Asia like normal. You have to trust the chart sometimes. And you know, when all Bitcoin pairs go through this, it's usually a distribution phase. And really, the alpha is not on the price ratio charts. It's more so on the market cap ratio charts, right? When you look at the market cap ratio, you can see that Sol Bitcoin sort of topped out at the same level that it topped out last cycle. And this cycle has been no different. Now, it's hard to convince people of that, especially in the moment. But this lower high occurred when Trump launched a meme coin, right? It's a fact. And it's also, you know, sort of, you know, it's also a fact that ever since the inauguration, Bitcoin has trended down. And I think the reason for that is on January 20th, when the market topped, we were pricing in perfection. We were pricing in a strategic Bitcoin reserve that still has not yet happened. We were pricing in deregulation, Gary Gensler resigning. But we still don't have a strategic reserve. And deregulation ultimately just meant presidents were going to start launching meme coins, right? So again, I'm a big believer in the free market, but the market will still punish people that invest poorly and put their funds into, you know, bad investments and whatnot, especially like meme coins. And that's exactly what's happening now. So for me, I think it makes sense to be open-minded to a right translated cycle as long as Bitcoin is above the 2024 high. As long as it's above that, right translated cycle is still theoretically intact, because we saw 30 to 35% corrections in 2017 to prior highs, and the market still went higher and peaked in Q4 of that year. If this level is taken out, then the argument for a left translated cycle goes up a lot. And the reason for that would be that it would just simply look a lot like, and we've talked about this before, the QQQ when it launched. Remember when the QQQ launched in 1999, it basically topped 54 weeks after the ETF launched. Now, we talked about this a lot last year, that Bitcoin would probably have a local top at the very least about 54 weeks after the ETF launched. And sure enough, 54 weeks after the ETF launched was the week of January 20th. Now, you might say, well, why didn't you tell me this 3 months ago? I did. I actually brought this up in March of 2024, that we could see Bitcoin rally into January 20th of the post-election year during inauguration, and then there could be, you know, a larger correction. So when the QQQ got that drop, it went over 100. The wick on that drop actually happened to be 63, right? So what a coincidence, right? What a coincidence that ended up being 63, and this level right here is 63, you know? So the QQQ back then got a left translated cycle, but that was even a worse translated cycle than if this is one. And there's no guarantee that this is one, but that was even worse because that one topped out in March of the election year. So that would have been similar to if Bitcoin had topped out in March of the election year, which it didn't, right? It didn't. It went up another almost year after that point. So in that sense, right? In that sense, Bitcoin, if it is a left translated cycle, it actually wasn't nearly as bad as the one that the QQQ got because it topped out in the election year and then trended down. So there's this whole idea behind cycle theory, and the way that it goes is like this. Major bottoms occur in midterm years, generally speaking, right? So you have, or around that time, right? See, this is the 2014 bear market, this is the 2018 bear market, and this is the 2022 bear market. So if we were to try to be objective about this, we would probably all come to the agreement, which might be the wrong thing, but we probably would come to the agreement that the next major low will likely be near the end of 2026, right? Near the end of 2026. That would be where the sort of the next major low is, wherever, whatever the price is, who knows. But that would be the argument, that you have these big drops and they bottom out in the midterm year. Even when the QQQ bottomed, it also bottomed out at the end of the midterm year of 2002. So predicting the bottoms is actually a lot easier in terms of time. It's the tops that are a lot harder to predict because sometimes you get right translated cycles and then other times you get left translated cycles. Now, right translated cycles occur when you get a 1-year bear market. So the bear market is just the midterm year. You just get a 1-year bear market. That's a right translated cycle. And if you look at the S&P 500 in the 1970s, right? If you look at the 1970s, back when we had periods of high inflation, what you'll notice back then is that we had a right translated cycle, and then we got a big wave of inflation, and this was a 1-year bear market. Then we had a left translated cycle where the peak occurred 2 years into the bull market, and then we had another left translated cycle where the peak occurred 2 years into the bull market. Right? You see that? So this top right here was in December of the election year. That top right there was in January of the post-election year. So, but what you'll notice is that the bottoms were all in the midterm year. 1966, 1970, and 1974. So the bottoms all occurred in the same year, the midterm year. It was the tops that changed. It was the top occurred at different times. Sometimes you had a right translated cycle where the bear market was only 1 year. Other times you had a left translated cycle where the bear market was 2 years. But here's the thing about left translated cycles, and I've said this for a long time. It's one of those things where what would likely happen if it does end up being that is you would have a macro lower high. A macro lower high. So in 1968, there was a big drop. There was a macro lower high in May. In the next left translated cycle, there was a big drop. There was a macro lower high in October. With the QQQ, right? With the launch of the QQQ, it went from 120, right? It went from 120 down to 63. But guess what? It still had a macro lower high in August where it went back above 100. So in the case of left translated cycles, you would likely have a big drop in Q1. We've said this many, many times, a big drop in Q1, which is potentially what we're getting now. But I mean, at this point, it's still possible it could recover and not be that big of a drop. You would get a big drop in Q1, and I'm not just talking to 86K. I mean, 86K is nothing, right? It'd be, into the 70s or the 60s. You would get a big drop in Q1, followed by a macro lower high in either Q2 or Q3. That would be a left translated cycle. Now, at this point, there's still hope that it might not be that. But, I just want people to recognize that is an outcome. Now, there's other outcomes that aren't nearly as miserable to consider, right? And I actually, and the reason I'm going to bring these up is because I don't believe this is the 1970s. I don't. And I'll tell you the reason why. in the 1970s, we had waves of inflation where if you were to overlay inflation rate year over year, what you'll notice is that we had sort of these secondary waves and tertiary waves of inflation where the reason you got a left translated cycle was because inflation started to skyrocket again. Now, the big concern right now is that inflation has been going up, right? That's the concern, is that really ever since the Fed started cutting rates, inflation has been trending higher. And there's been a lot of people that sort of overlay inflation from the 1970s to inflation today, right? A lot of people made that comparison. But what I would argue here for inflation, I don't think this is the 1970s. I really don't. And I want to explain why. I'm going to explain why I don't think it's the 1970s and why there's other things that we could look at that might not be so pessimistic, right? So, one of the reasons why that one of the reasons why the 1970s saw those left translated peaks was because of those secondary and tertiary waves of inflation. But the thing that happened back then that allowed for a secondary wave of inflation was something that actually hasn't really happened today. Okay. And that doesn't mean it won't, but the unemployment rate. So let's take a look. We're going to overlay the unemployment rate onto the chart. If it loads. Here it is. So in the 1970s, when the S&P 500 had a left translated peak, inflation was going up. The unemployment rate was going down. That was the first left translated peak in 1972. That was the second one. The first one, inflation was going up, unemployment was going down. So what did you notice? What do you notice back then that led into a secondary wave of inflation? You had unemployment going down and you had inflation going up. Why is that? Well, if the unemployment rate's going down, it generally is a tailwind for wage inflation, right? Where workers get paid more. Now, obviously, people want to get paid more, and I'm not arguing there's anything wrong with that. What I'm saying, though, is that when you have a tight labor market, it leads to wage inflation, right? If the unemployment rate were to start going back down to 3.5%, there would be a lot of wage inflation. And if there's wage inflation, it would be a tailwind for just overall headline inflation. And the reason for that, if people are getting paid more, they're going to go spend more. And that's going to drive up the cost of goods and services. So that's not what we're seeing today, right? We're not seeing the same exact thing. Now, admittedly, we are seeing inflation go up. And this is what we said was going to happen, right? I said back in September that we would likely see inflation trend up after the Fed cuts rates. We would likely see the 10-year yield trend up and the dollar trend up, at least until January. And that's exactly what they did. The dollar rallied until January, and so did the 10-year yield. It's possible they go higher, but that was sort of the base case, just to rally into January. Now, when I look at this chart, right, and we look at, I don't need the balance sheet of the Fed on here, but when we look at this chart right here, one of the things to notice is this. Inflation's gone up. The unemployment rate's not really trending down, right? If anything, it's been trending up. So I don't think we're going to see the same type of wage inflation. Now, this is where I could be wrong, right? You could argue that there's some changes, that some changes in immigration and that type of stuff could lead to a tighter labor market. But even if you wanted to make that argument, you could almost argue that layoffs at the federal level might help offset that, right? So again, even when I try to come up with ways that I could be wrong, I'm like, well, technically, even if I am wrong about that, then there's this other thing that's happening at the federal level where there's a lot of layoffs. And you know, at the end of the day, these periods in the market, when you're living through them, they're hard. When you look back in 20 years, it will have, you know, it would have been like, why were you so afraid? Right? Why were you so afraid? And I think it's hard because like these trends can last longer than you know than people want them to. Um, but the thing about periods where the unemployment rate goes up is that it helps to get rid of all the filth and the froth in the space. Now, obviously, in crypto, there's been a lot of that, and you know sometimes Bitcoin has to do this to get rid of some of that stuff. Now, there's another time that I'd like to draw your attention to, and it's the 1980s, and I could make probably some better comparisons to the 1980s than the 1970s. And what's really interesting about it is if you look at the 1980s, one of the things you'll notice is that this was when Reagan was elected, right? When Reagan was elected. So you had a peak here, and the market trended down, but it still then continued to go up later on. There was some pain for a period of time, but so what, right? I mean, it basically allowed for the frothy stuff to go away and for us to get back on the right track, right? So yes, there was a downturn in the economy when Reagan took office, but you could argue that that time, that time right here, where you had sort of these back-to-back recessions, right? That time right there, arguably set up this expansion here, right? So don't go into this type of stuff super fearful. I mean, it doesn't make sense to do that. I think it makes sense to know that look, these are the outcomes, right? It could be right translated, it could be left translated. There's a certain probability of both outcomes, and no one actually knows what's going to happen, including and especially me. But if there's any likelihood at all of a right translated cycle, then you want to make sure your portfolio is somewhat prepared for that. And if there's any probability of a left translated cycle, you want to make sure you at least have something to buy cheap assets with, right? Because the worst thing is to then watch the markets go down and there not being a damn thing you can do about it because you're already all in the market. So one of the things I want to mention though is that for Bitcoin right now, it's sort of being hit at an unfortunate time. But we have talked about this a lot. This is not a good time for the S&P 500, right? It's not, regardless of inflation and unemployment. I don't know why. Maybe some of you guys can tell me. But from options expiration in February to option expiration in March in post-election years, the S&P is awful. I don't know why. I don't know why. I'm sure there's a reason, but it doesn't do that well during options expiration from February to options expiration in March. And we just had options expiration this past week, right? Just a few days ago. Just a few days ago. And if you want visualization of that, rather than just taking my word for it, go over to the year-to-date ROI. By the way, guys, if you're not subscribed, make sure you subscribe and give the video a thumbs up. Sorry, I'm not reading the comments, but I'm just trying to go through my train of thought here. If you look at 2025, let's go to the S&P 500. If you look at 2025 and you compare it, this is the S&P, and you compare it to the average of all prior post-election years going back to 1928, you can see that the S&P just doesn't do that well from like February until March. I don't know why. I wish I had an answer, but I don't. And so that's also potentially what's going on right now. Right? You're just getting a normal correction that you normally get in February to March of the post-election year. So that's also hitting Bitcoin kind of hard, right? Is that is going on. Did you guys know that the whole pandemic crash, this is kind of an interesting tidbit. The entire pandemic crash for Bitcoin occurred between February options expiration and March options expiration. Isn't that crazy? Right? The entire pandemic crash was confined to options expiring from February to March. The entire pandemic crash. Now that was in an election year, not a post-election year. That was an interesting sort of observation, I think, to make. So I think what I'm sort of thinking right now is the most likely outcome in the short term is using sort of some of these other charts to identify what's the most likely outcome is looking at ETH and saying, it normally drops a couple of weeks after its knee-jerk rally, right? Get your knee-jerk rally, and then it drops a couple of weeks. So I kind of think the most likely outcome right now is that we get this couple of week drop, right? Probably this week and next week. And then there might be some relief on the other side of the labor market release, assuming it's good news. That doesn't mean Bitcoin can't go lower between now and then. It could, and maybe it goes all the way down into the 70s, right? You don't want to see it go into the 60s. If it goes into the 60s, then I think you would still get a big bounce and no macro lower high, but I think it would be a left translated cycle. As long as it stays above 74K, 73, 74K, I think you still have at least decent odds of a right translated cycle. But I think if you're looking at the ETH chart and you're trying to figure out, well, what's the most likely outcome, it kind of just looks like it's following this pattern. And we're just in the first of 2 weeks. The first week of 2 red weeks. That doesn't mean that like the low can't be put in this week. Like you can see over here, the low was put in the first week and then it dropped the second week, but it still was higher than the wick low from that week. But and I also think with Ethereum, it's going to get squeezed somewhat between its regression band and its bull market support band, right? I mean, this is exactly what happened last cycle, is that it got into this range, right? It was in this higher low structure, and then it got squeezed between that higher low structure and the bull market support band, and then eventually it broke down. You see that? So you could argue that maybe something like that is happening again, right? Where it's it could be interpreted as breaking down now. I think the sort of the case holding someone back on declaring that is that there's been a lot of wicks down that didn't actually take it further down. So that's kind of what I'm looking at there. Does it actually stay down here, or does it just go back up to 2600 by the weekly close? And I think that is kind of the thing you have to consider, is that if it just gets back up to 2600, then this is still just a wick. Right, which would actually be kind of similar to this, right? If it goes back up, and then maybe the following week it gets down here, and then gets a couple week rally back up there, and then down, and then maybe up, right? I could see it. I could see it playing out like that, where it sort of goes back up in the short term, and then drops again next week. I wouldn't be that surprised if it played out like that. Bitcoin dominance is at 61%. I'm still under the impression that alt Bitcoin pairs will likely go to the range lows before this is all said and done. I think that is the most likely outcome. And this has been sort of like a broadening wedge, I suppose, where it's just chasing one narrative after another. But I do think that the most likely outcome is that alt Bitcoin pairs eventually find themselves down here. That's what I think. I think they will eventually find themselves down here. It's just a matter of time. I just hope they find themselves down there before, 2026, right? If they find themselves down there by the summer, that would be, give alts more time, potentially in this year. But it's been a long, brutal bleed by the altcoin market, and if you look at like others Bitcoin, right? If you look at others, the others valuation against Bitcoin, right? It's just been this long, slow bleed. Now imagine in 2022. So I traded my alts to Bitcoin in early 2022, and I was vocal about that. And the reason was because I thought alts would underperform Bitcoin until quantitative tightening was over. I didn't know quantitative tightening would still be going on in February. of 2025, right? I didn't know that. Um, but imagine trying to explain this chart to someone in 2022, right? That this is what the chart would look like. It's like, good luck explaining that and getting people to believe you. And every single time that all Bitcoin pairs have rallied, it's led to a lot of people, um, you know, calling for alt season, right? And it just simply hasn't been alt season. It looks like alt season for a lot of people, but it just ends up not being that. And altcoins keep going lower. And I think part of the reason is because people keep saying that you should front run alt season, that you should front run the end of quantitative tightening. But if anything, history has proven those people wrong over and over and over again. And they tweet it out over and over and over again. And people love their comments over and over again. And you fast forward a few more weeks, and it turns out, surprise, surprise, they were wrong about all season again, right? And it's been one of those things where, like, I think people think they're being contra to call the bottom on all Bitcoin pairs, but in reality, the contra position was to be bullish on Bitcoin dominance. It's easy for people to call tops on Bitcoin dominance. It's a lot harder to remain bullish on Bitcoin dominance, especially when it takes so long to go up. Now, I don't know. I don't know how much higher dominance is going to go. Um, I think it's possible they could go to 66%. I'm not married to that idea. I'm certainly not married to that idea. But I think the reason why it's a possibility is because all Bitcoin pairs are still well off their range lows, right? If all Bitcoin pairs were at 0.25, I would say, it's more likely that Bitcoin dominance would have topped. But I do consider altcoins to be oscillators at best against Bitcoin. And because I believe that, I just ultimately think the most likely outcome is for all Bitcoin pairs to come back down here. And I just don't see a way for all Bitcoin pairs to go down there without Bitcoin dominance going up a lot. The only way, I guess there's one way it could happen, is if ETH Bitcoin bounces while all Bitcoin pairs crash, right? That could be a way where Bitcoin dominance doesn't go that much higher. But nothing at this point has given that clue, right? I mean, ETH Bitcoin hasn't really seen any sustained strength, right? It's still sitting below 0.03. And so I don't know if that's really the most likely outcome at this point. you know, ETH Bitcoin has just continued to go down. And if you look at ETH Bitcoin market cap ratios, what you'll notice is that it's basically getting back close to sort of the bottom part of the range. Now, if you look at the risk metric for ETH Bitcoin, if you go to ETH Bitcoin, you'll notice that it is getting pretty low, right? The high was over here back in May of 2021. And now when the ETH Bitcoin ratio was sort of topping out, and then now it's getting pretty low, but that doesn't mean it can't go, doesn't mean it can't go lower. It also doesn't mean it can't bounce around this level for a while and then eventually go lower, right? That's what it did over here in 2018, 2019. But, I look at these charts, and also, if you look at the Bitcoin dominance risk metric chart, it's gone up to the 0.8 to 0.9 risk band. It's getting pretty high. It doesn't mean it can't go a little bit higher, right? It could go a little bit higher into the highest risk band. And arguably, if all Bitcoin pairs get that final drop to the range lows, that would likely send the risk of Bitcoin dominance to the 0.9 to 1 risk band, at which point it might more convincingly top out. So that's generally, my view right there on the market. But I mean, right now Bitcoin is just below 87K. It's down about 10% this week. We've had these weeks before, right? I mean, it's not like we haven't had these weeks. We had a 10% drop, and we had a 15% drop in July. It's not like we haven't seen this stuff. And I think the other thing to consider is going back to, monetary policy, not only in the States, but also in Japan. A lot of these drops by Ethereum have occurred after rate hikes in Japan. And I think the reason why the market might be spooked is because if you look at the 10-year yield in Japan, it's actually been going parabolic for a while. So if it keeps doing that, then the Bank of Japan might have to raise rates sooner rather than later. As it stands right now, the BOJ wants rates to be at 1% by January 2026, which means 2 rate hikes between now and about 10 months from now. Um, the next rate hike, it has been projected to occur in July, but there have been some former BOJ members that have stated that, if inflation continues to rise, if the economy is still doing fine, they might raise earlier than July. So, if you get another hike by Japan, that leads to the unwind of the carry trade. Now, it's not just the Bank of Japan hiking, it's the delta between the interest rates by the Fed and the interest rates by the Bank of Japan, right? It's the delta that's more important, not just if one's hiking. And the reason why the August capitulation was so brutal was because you had the Bank of Japan hiking at the same time that the SOM rule recession indicator triggered. So you had all these rate cuts getting priced in by the Fed into for the Fed, and all these rate hikes getting priced in for Japan. And so then you had basically this massive unwind of the carry trade. Now, at if you look at interest rates in the United States minus interest rates in Japan, you'll notice that economic downturns historically occur when this metric is dropping. Right here, right here, right here, and then here's the 1980s. Remember, we talked about Reagan in the 1980s? It's when this metric is dropping that you normally get economic downturns. There are times when it drops when you don't, right? Like right here in 2019, you had it drop and you did not have a recession. I mean, you got one, but it was a pandemic a year later. You also didn't have a recession in 1984 when this metric was dropping. So just because it drops doesn't mean you have to have a downturn in the economy, but basically all prior downturns in the economy occur when this metric is dropping. So I think that is something that you have to consider as well, because I think a lot of people are confused. They're like, if you have everything perfect under the sun getting priced in, or if you have everything perfectly going on in the markets, right? You have Trump being president, the pro crypto president. You have all this stuff going on. Why are the markets trending down? And I think it's just, when you price in perfection and then you realize perfection isn't what you thought it was, it leads to de-risking in the market. Doesn't necessarily mean the cycle's over, but it means that pain has to occur, and that's it's happening once again. Um, there's a few little tricks you can use to figure out when these drops occur, and I sort of joking about this on Twitter and in ITC Premium is like anytime Litecoin starts pumping, usually the market corrects, right? And sure enough, like anytime it gets these rallies, the market corrects. And then also anytime people start calling for XRP to go to $500, normally the market corrects. So some of these use cases for these legacy coins, it could just be that when people call for them to rally, it's when the market's time for a correction. But I do think that actually, if you look at the inversion of the 10-year and the 3-month, they're actually inverted again. It looks like, right? It looks like they're actually inverted again right now, primarily because of the drop in the 10-year yield. I think it's becoming apparent that Trump is measuring his success on getting yields down, more so than worrying about the stock market. He already said he's not that concerned about the stock market. Remember, he's a real estate investor. He wants his view of the economy. He wants rates to be low, and by having some pain in the market, that's how you get rates to go down. That's exactly what's happening, right? He's getting what he wants. He wants the long end of the yield curve to go down, and he's getting that, right? And who knows why it's occurring, whether it's because layoffs at the federal level or whatever, but he's getting what he wants because you can see that the 10-year yield topped out right here the week before he took office, and ever since then the 10-year yield has been dropping. The dollar has also been dropping ever since he took office. And I told you guys back in September that it would likely rally to 109 to 110, up here, and then get a big drop. I don't know if it's going to go higher or not, but that was the easy part of the move. When people were calling for it to break down at 100 when the Fed was cutting, it made absolute sense to fade that. And not a lot of people were calling for alt season back then too. But no, the dollar went up. It went to 109 to 110, and that was where the correction was going to occur. Now, I do think there will be another rally by it, probably back up to 108, maybe 109 at the very least. But in the short term, this has been the most likely outcome. If it goes higher than this level, then I mean that would be pretty bad for all Bitcoin pairs. Hopefully, it doesn't have to go back up there. But just keep that in mind as something that could theoretically happen. All right. Make sure you guys subscribe. If you're not subscribed, give the video a thumbs up. Let me go check. We got a decent number of people watching. We don't even have 1,000 likes. So we got 6,500 people watching on YouTube. So if you guys could give the video a thumbs up, I would appreciate that. That would help me out. Can I put up an analysis of Solana? Look, guys, my view on Solana is that it's going to eventually go to its range low against Bitcoin. There's going to be some lower highs along the way that are going to get people upset because there's going to be people that are going to sell the low. It's going to rally, and then it'll put it a lower high. But I think it's just following ETH Bitcoin. And I know a lot of people were making fun of it a few months ago. They're not making fun of it anymore, right? I mean, this just looks like a massive distribution phase, just like it had over here. It had another one over here. Same thing happened with ETH Bitcoin. I know there's a lot of people that are telling you this is not happening, but ask the ETH maxis what happened. Once upon a time, they thought ETH couldn't go back to the range lows, and now it's there, right? So I get that if you're a Solana maxi, whatever that means, that you probably don't think this can happen. The ETH maxis watched it happen. Why can't it happen to Solana too? I don't buy that it's different. I mean, it looks the same to me. It might take it a year or two to get down there, or maybe it'll just accelerate it. Maybe it'll just speed run what ETH Bitcoin did. But I think that it will eventually come down to the range lows. Is my guess. What else do you guys want to talk about? Can I make dubious speculation on ADA? I think ADA Bitcoin is just repeating what it did last year. Rally in December, go down, and fade. It's doing the same thing, I mean, it's just doing the same thing. So I try to tell people that, but it's hard to convince people when it's rallying. But it looks like ADA Bitcoin's just following what it did last year. Again, I'm thinking in terms of sats, and some people want to think in terms of US dollars, but I think it makes more sense to think in terms of sats, not US dollars. Because Bitcoin, I think, should be the unit of account, ultimately. In the cryptoverse, Bitcoin should be the unit of account. Someone says the Fed will end quantitative tightening in the summer. I could see that. Yeah, I mean they actually they released FOMC minutes not that many days ago where the sort of the median projection is that they'll end quantitative tightening sort of mid-year. So I could definitely see that. Why not include USDC when doing total 3 minus USDT divided by Bitcoin? I do sometimes. The reason why I don't always do it is because it doesn't really make a huge difference. The reason why I like not including it is because it gives us data going further back, right? So if you don't include USDC, you'll get this data going back to 2017. But if you include USDC, right? So if you also subtract out USDC, you'll get a slightly more accurate chart, right? But you don't have data going back to 2017, right? It stops here in 2018 because USDC just we don't have the price data for USDC back that far. And you can see that it doesn't really change a whole lot, right? The range low is still going to be about 0.25. The only difference is that we're currently at 0.35 and not 0.38, right? So there's sort of a little bit of a rounding error on it, but by looking at it like this, it gives you a little bit more history. So that's the reason why I exclude it. It's not because it's not important. I just want the chart to be a little bit more complete. Does QE guarantee alt season? No, I mean, in fact, last cycle when QE began, the altcoin market bled. It's just that all Bitcoin pairs went up, right? And I think that's sort of the biggest thing that I've tried to communicate to people is that when QE began here, right? When QE began right here in September of 2019, alts got a little bit of a rally, but then they still didn't go anywhere for a while, right? So just because you get QE doesn't necessarily mean you get alt season. Um, that's why I say, if you're waiting for that for some miracle to happen, you might be disappointed. Let's keep it over here on Bitcoin so we can see what it's doing. By the way, the bull market support band is around 89.5 to 92K. So if you're curious by the weekly close where Bitcoin needs to be to stay above the bull market support band, it really needs to be above about 89.5K. So let's just call it 90K, right? If Bitcoin closes the week at 90K or above, it's still above the bull market support band. Usually summer is bad for crypto. It usually is. But there are a couple things to consider. This is what I would say. If it's a right translated cycle, the summer could be bad for crypto. If it's a left translated cycle, the summer actually might be the opposite, right? It might actually be good for crypto. Like if you go back to the QQQ, when it had this big drop in Q1, it then rallied in April, May, June, July, and August, right? So the QQQ trended up in the summer when it normally wouldn't, right? Because the prior year in the summer it was basically going nowhere. So it went up during a time when it normally didn't or wouldn't go up, and then it crashed when it would normally go parabolic. So I would almost argue that if crypto does well in the summer, it might actually be a sign of a left translated cycle, right? If it does poorly in the summer, then maybe there's a chance it could still be a right translated cycle. Um, but actually, in 2017, I think the summer was actually pretty good, but also Q1 was pretty bad, right? Q1 Bitcoin dropped like 8-9% or something, or no, it went up 8 or 9%. It just wasn't a huge move up. I would sort of put some of the prior assumptions aside because things can play out differently in post halving years. Like normally, I would say Bitcoin does poorly in the summer, but if Bitcoin gets a big drop in Q1, then I might shift my bias to assume it gets sort of a rally, kind of just a knee jerk reaction rally going into the summer if there's a big drop in Q1. Someone says ETH at 2.4K seems like a once in a lifetime opportunity. People should stop being bearish. I don't really think people are upset about ETH at 2.4. I think that the reason a lot of ETH holders feel bad is because of the ETH Bitcoin chart. That's more so what it's about, not the USD valuation. Here's an interesting question. Does a recession equal bear market in this cycle? I've probably, but there's one interesting comparison that I've made a lot, and I know it's easy to make fun of this, and I'm sure I'll probably make fun of it too. But like this move by ETH, it still looks similar to me as what the S&P did in 1989 to 1990, and you're probably like, why is he talking about this? But just bear with me for a minute. If you look at the S&P 500 in 1989 to 1990, there was basically a triple top where the last top technically put in a higher high, right? You see that? It technically put in a higher high, and it also put in lower lows. So the final low was a recession, right? So you had a low, a lower low, and then the recession low. And off of these lows, you had these highs. And then this was sort of a double top, right? Is Ethereum not doing the exact same thing? A triple top and lower lows? And what if the final low is down here, maybe in a recession, in the regression band, right? In the regression band. You see that? You see how the regression band comes up right to that point? So what if, for Ethereum, what if the most likely outcome is that, where it just drops down here and then gets a big rally? What if that's what happens? That's what happened by the S&P 500 in 1988 or 1989 to 1990. That's what happened. It put in a lower low, and I'm sure everyone thought everything was over and that, it was going to be a catastrophic recession. And before we knew it, the recession was over. I was born in 1990. Um, uh, so before you know it, it was over, and the rest is history, right? The rest is history. Market went up after that, but you had this correction. Now there's an interesting chart, I'll have you know, that sort of makes me go to this comparison. And when I first found this comparison, it wasn't just looking at the S&P, right? I didn't just look at the S&P and be like, oh, that looks like Ethereum. What I did instead was I looked at interest rates minus the 2-year yield. If you look at interest rates minus the 2-year yield, what you'll notice is that they historically top out at around the same level, right here, right? They've topped out right here, and this high right here is sort of the same, that same level. See, this is August or September 2024, January 2008, and July 1989. So the reason I looked at 1989 to 1990 at all was because I was looking at this chart. I was like, oh, this looks similar to 2 other times in the market. It looks similar to the financial crisis, unfortunately. That's the pessimistic view. The optimistic view, it looks like 1989. Now, in 1989, the S&P 500, or 1990, going into the next year, the S&P 500 only dropped 20%, right? In the financial crisis, the S&P dropped 58%. So this is the pessimistic view. This is the optimistic view. So I know a lot of people are making fun of it, of 1989 to 1990. But if you look at this chart, you can at least see some justification for it. And the S&P 500 bottomed back then in October. And if you look at this chart, October was when this metric had this bounce back up when it topped out. You see when it topped out? So if you look over here, you can see it's starting to bounce back up. If this thing like tops out over here, maybe that's the end of the recession, and then it just, it drops, right? It might drop, but it might not be a bad thing, right? As it dropped over there, the S&P 500 actually went up, right? It actually went up. You can see it, right? As it sort of had this recession drop right there, and then as it continued to drop, the S&P went up. So that was where kind of the analysis originated from. Like I wasn't actually just looking at the S&P and going through each prior downturn and being like, "Oh, does that look like Ethereum?" It was more so looking at this chart and realizing there's only two times in history that we have data for right here that you could make this comparison, the financial crisis and 1990. And then when I looked at the S&P the S&P 500 in 1990, I'm like, oh, that looks a lot like Ethereum. Now you might say, well, didn't the S&P get this sort of this double top? That looks a little different for Ethereum today. And you're right. But if you zoom in on a daily time frame, ETH USD did get the double top, right? It did. Right here. 1, 2. So in that sense, you could even argue that it looks similar to that, just on a shorter time scale. So I still think that there's some relevance to look at the market in that way, and that it might just be sort of a drop into the regression band eventually, and then a big rally out of it. How do you find top on ETH Bitcoin to convert back to Satoshis? So the only thing I did for ETH Bitcoin was just knowing that in midterm years, alts normally go down and Bitcoin dominance normally goes up. But what I would look at in the future is that ETH Bitcoin tends to top out and go down when quantitative tightening begins. So if you look at assets held by the Federal Reserve, you'll see that last cycle, when QT started, that's when ETH Bitcoin started to go down. And then this past cycle, or this was 2 cycles ago, but this past cycle, right, when QT started, ETH Bitcoin started to go down. So back then, everyone was saying, well, you're missing out on the fundamental analysis, you're ignoring the merge, you're ignoring this deflationary component, etc. But in reality, none of that mattered. I'm not saying it doesn't matter grand scheme, but when QT is going on, ETH can bleed to Bitcoin, right? So that's what I would use, right? And you can see that when quantitative tightening ended over here and QE began, that's when ETH Bitcoin went up. Now, you don't have to have QE just because QT begins or QT ends. In fact, in 2017, 2015, 2016, ETH Bitcoin went up and we didn't have QE. It's just the balance sheet was flat. That's why I'm not saying you need QE for ETH Bitcoin to go up. I'm just saying you need the end of QT. You don't, you could, what's probably going to happen is it's probably just going to level out at some point and not immediately go back up. How do I feel about meme coins? I think that they're scams, and I think that they're a cancer for the space. And I think that the culture that you guys think they provide is not a culture that a lot of people actually want to be a part of. Um, I don't think they're good. I think they're bad, and I think the people that defend them the most are one of two people: the people that profit the most from launching them. They're going to obviously argue my views because they want to launch them and fleece their followers. And the other people that argue for them are usually the people that are losing all their money on them, because they keep wanting to gamble and they keep thinking the next one is the one they're going to hit it big on. But in reality, and they're defending the people that are launching them, the people that are launching them are just fleecing their followers. So I don't think meme coins are good. Um, I think that in prior cycles, like it was easy, it was kind of easy just be like, oh, haha, when it was just a couple of them. But now with everyone launching them, I think they're really bad. I think they're really bad for crypto overall. And if you want to sit here and argue that they're good because they bring people in, that's a great narrative, but that's not actually what's happening. Because I track the social risk, and the social risk hasn't gone anywhere for years. And why would it? Anytime new people come in, they just get rug pulled on a new meme coin. So I actually think they're really bad. I think they used to be sort of fun for in some ways, but I think they've devolved into something really not good for the space, and it's actually causing a lot of other projects to not see any inflows of capital because everyone just keeps rewarding meme coin or people launching meme coins, right? The people launching meme coins want you to believe it's a meme coin super cycle, but it's not, and it never was. And if you look at others Bitcoin, you can see that it was just a narrative to get people to throw their money into useless meme coins for them to only go asymptotically to zero against Bitcoin. Those are my thoughts. You asked. Yeah, I mean, look, from a cycle perspective, right? From a cycle perspective, it's not like things are that off. Um, if you look at like the ROI from the low, you can see that it's not like it's that far off, but it is starting to go down here when it normally doesn't. But if you look at it as measured from the halving, right? There was a drop around this time in in the 2021 cycle. Of course, that was also near the highs, but there was a drop. I think the other way to look at it is if you measure it from the peak and you go peak to peak, there was actually a drop around this time in the 2016 cycle, right? And then it bottomed out and then it started to trend back up again. Um, if you measure it from the April top, it looks a little bit more extended. But yeah, those are the ways to look at it. Dubious speculation on Luca's career in LA. I hope. I mean, it looks like he's starting to get it together. I think they had a little bit of an issue first, working on the chemistry, but we'll see. Don't they play? Doesn't he play the Mavs tonight? That should be interesting. Could we see QT end this March? Anything's possible, right? Anything's possible. I mean, the FOMC minutes said the sort of the average view is mid-year. It could end as early as March, but I think it'll end this year. But I don't know exactly when. Is it possible because of politics and the meme coin space, it could permanently change the typical Bitcoin trajectory? No, look, I think absolute worst case scenario is that it's a left translated cycle and there's another major low in 2026 and then we get back on course. That's worst case scenario. I don't think Bitcoin's going to die because of meme coins and politics. Bitcoin has existed under both administrations in the past. Um, I think worst case scenario is you just get a left translated cycle and then we try again next cycle. Hopefully it's still a right translated cycle and we're just going down to get out some of the froth. But I'm just saying, right, if you want to compare, you want to consider all outcomes, right? A lot of people don't consider all outcomes, and that's why they weren't willing to listen to the idea that Sol Bitcoin could get this big drop, right? You always want to consider all outcomes. And I think like it makes sense to be open-minded to those, if it's not a right translated cycle, what would that actually look like? To me, that's worst case scenario is a left translated cycle, and then you just pick back up again in 2027. I hope that's not what happens. Um, if that is what happens, it's not going to be obvious until the third quarter. I think. I don't think it will be obvious until Q3 because you would have this massive drop in Q1, which maybe is what we're in right now. You would have this massive drop in Q1, and then you would have a rally into a macro lower high in Q2, Q3. That is if it's a left translated cycle. So if it is one, it's not going to be obvious, right? And what would likely happen is that people would capitulate at a low and then spend the next half year wondering if they sold the bottom before it becomes apparent they didn't. Um, the macro bottom, right? So, I don't know. I really don't know if it's a left translated cycle. Again, as long as we're above 73, 74K, then the odds of a right translated cycle are still relatively intact. But below 73K, I would argue it's more likely a left translated cycle if we go below 73K. And it's not about predicting. It's just about, look, this is how you manage your risk. And, I said it made sense to de-risk a little bit January 20th, which actually happened to be the local top. And the reason was because the markets de-risk oftentimes when you price in perfection, right? When you price in spot ETF, it's kind of like March of 2024. It's kind of like that. The markets were just pricing in so many good things, and then had to trend down for a while before we had sort of enough juice to go back up. So I kind of think that's what's happening, right? Markets were pricing in perfection, and now people are trying to figure out, are we going to get back on course? Again, my guess, if I'm spitballing, right? My guess is that if we're going to find relief, it's going to be after the labor market data. That's what I would think. If we're going to find relief, it'll be after the release of the labor market data, assuming it's not that bad. Is the bull market relying on the S&P doing well? Yeah. If the S&P does poorly, I don't think Bitcoin would do well. Normally the S&P does pretty poorly again between February options expiration and March options expiration in post-election years, which is where we are right now. That's why I said previously we might see the S&P show weakness. How do you hedge for a left translated cycle? I mean, have some cash in case things go to hell. If you look at modern portfolio theory for a portfolio consisting of Bitcoin, ETH, and US dollars, it would essentially say right now, um, you know, 30% US dollars is a way you could hedge. That doesn't mean go panic sell until you have that. I mean, I'm just saying that's what it would have called for a month ago. Any opinion on rate cuts in March? I don't know. I mean, it doesn't seem like the most likely outcome, but I guess if the S&P nukes between now and then, it's not completely off the table. If you look at the watch tool, it looks like there's still only about a 5% chance they'll cut rates in March. But this has been wrong before. It's possible they cut, but if they're cutting in March, it's probably not for a good reason. Let's put it that way. USDT dominance. Yeah, I mean USDT dominance has basically just found some support again at around that 4% level, right? 4% level, it's found support at. Sort of like swept the low, but it is above the bull market support band again. It looks like it might just be repeating last March, right? Where it, you know, does this, it goes up, gets rejected, and then just kind of slowly grides higher. It looks like it's repeating that. Make sure you guys subscribe if you're not subscribed and give the video a thumbs up. I do appreciate it. Um, Someone says, aren't we supposed to see the top of the bull run around the end of 2025? Yeah, I mean, if it's a normal right translated cycle, that's when it would be. Hopefully that's what happens, guys. Like, I mean, I always say hope for the best, plan for the worst. Hopefully it's a right translated cycle. I'm just saying there is some history to suggest in prior market cycles that you could have a left translated peak. I'm not saying that it's the most likely outcome. I'm just saying that we always want to explore all outcomes, and there is an outcome where markets sort of top out at the beginning of the post-election year. We saw that in the 1970s. We saw it when Reagan took office in I guess 1981. Um, that stuff can happen, right? It doesn't mean that markets are going to trend down forever. It just means that there's a little bit of pain in the short term. Um, yeah, a lot of people keep asking me if I can explain the difference between left translated and right translated, but look, I'll probably just do a video on it. I mean, the problem is I explain it in these live streams and then like only a few people hear it. And then a lot of people are going to watch this live stream. They're not going to watch an hour and a half live stream later on. So I'll just do a video on it and we'll talk about it then. So make sure you subscribe so you don't miss it. Explain the total 3 minus USDT divided by Bitcoin. We're just looking at all Bitcoin pairs, right? You're just looking at the relative valuation of alts against Bitcoin. And I think that their alts will bleed against Bitcoin. That's what I think. I think they're going to go down here. Considering how big the dilution is in capital because of meme coins, especially the last few years, do you think this will reduce in the next years or just stay to be a growing part of crypto? I think it'll reduce. I think that um, the free markets will punish that malinvestment. I do think it will reduce. Why do I look at the Fed balance sheet instead of global liquidity? We look at global liquidity on here. I mean, global liquidity is more so better for watching the USD valuations of risk assets. The balance sheet and net liquidity, the balance sheet of other central banks, that's better for looking at the relative valuations of alts against Bitcoin, right? But I mean, here's your global liquidity chart right here. Sorry, my contact is it's coming out. All right, guys, I might have to run. My yeah, my contact was coming out. Price action looks like the S&P in 2004, 2005. Um, maybe I don't know. I mean, maybe. I mean, it's possible. I have wondered before. It has crossed my mind. Like, this low here was in 2002, and then this low here was in 2009, and then this low here was in 2022. And I'm like, do you have some major market crash in like 2029? Like, is it? Are we just adding 20 years to this? I don't know. I have thought about that, but I wouldn't say it's my base case. How to set this chart? The alt Bitcoin chart. Well, all right. I'm gonna post it in the comment section. So you copy that I just posted in the comment section, and you put it in TradingView. Right now, Bitcoin's at about 86 and a half. It looks like the lowest it's gone today is around 86K. We go look at it on a shorter time frame, on like an hour time frame. Um, yeah, I mean it's fallen pretty hard here. Bitcoin dominance is actually down today, right? It's actually down today. Um, but I still think it will likely go higher. I know it's down today, but if you look at prior times when Bitcoin fell below the bull market support band, there are times where I think dominance sort of temporarily goes down, like right here, like where Bitcoin fell below it, dominance went down. But I still think eventually dominance will probably pick back up as long as QT continues. If QT ends, if quantitative tightening ends, then I might change my mind. But as long as quantitative tightening continues, I think the most likely outcome is that dominance does go higher. All right, guys, make sure you give the video a thumbs up. Uh, Only 2,000 likes. Any advice for a selling plan? I normally just do like dynamic DCA, right? So I'll sell a little bit as we go up in the higher risk levels. Um, I mean, I basically told ITC Premium people, a few weeks ago that it made sense to potentially de-risk a little bit if the markets are, sort of pricing in perfection, right, around January 20th. But you know, but even then, it's not like it would have called for selling everything because there's always a chance you get a right translated cycle. Um, so it's hard to say. I mean, I think it can make sense to have like 30% uh sort of safe in case the drop continues, like in dollars, or if it ends up being left translated. But I think that's kind of the strategy, right? You don't want to have nothing set aside, but you also don't want to panic sell the bottom either, right? So I mean, I stick to the risk metrics, right? I mean, that's what I do. I just go over here and I stick to this, you know. Interestingly, we made a lot of comparisons between 2019, like this risk metric right here is not obviously went higher in March, but it's actually the same level as 2019. If Bitcoin goes to 70K and ETH is at 0.02, what will be the USD value? Guys, come on, you got to do some math. I mean, think about it. 70K, 0.01. 0.01 would be 700. Therefore, 0.02, 1400. Do you think the cycle is more difficult to manage? I think it's more difficult to manage people's emotions because they keep wanting alt season and it keeps not happening. And I keep trying to tell them, like, the ADI is going down until monetary policy changes. And, I didn't know QT was going to go on for this long, but I also haven't, I don't really think it's made sense to pivot the view. And, the most altcoins just keep going lower. What would it take for retail to come back to the space meaningfully? I don't know. Maybe we actually innovate and not just launch shitcoin casinos. That's a crazy idea, but in prior cycles, we never focused on when retail was coming back. We focused on innovation and, people were excited about what crypto could do. This cycle, it's been all about how do we get crypto in front of more people, not how do we actually innovate. It's all about strategic reserves and ETFs and, celebrities launching meme coins. Feels like we focused on the wrong things this cycle. So, I mean, the way you get retail to come back is we stop launching useless meme coins and we get back on track. Unfortunately, I was hoping we could do that without the free market eventually punishing those people, but it seems like, seems like that's what's happening now. Is there a chance the dominance is topped and just chops here? Yeah, there's always a chance. Like if the Fed ended QT in March, then it's definitely a possibility. But my main reason for staying bullish on dominance is because first of all, like it never stopped going up, right? So everyone who's tried calling the top on it has actually been wrong. Second of all, quantitative tightening is still going on, and last cycle dominance kept going up until QT ended. And then third of all Bitcoin pairs still remain well off their range lows. So, you basically have, for me, three compelling reasons why it could just simply going higher. It could just continue to go higher. All Bitcoin pairs, I think, will eventually drop to the range lows. Someone says, I thought this was going to change the world when I first joined 6 years ago, and this cycle has been max script. It is true. I mean, like this cycle has just been launching meme coins has been the main thing that people have focused on. All right, guys. I think we should wrap it up. I'll probably go eat lunch or something. You guys know my thoughts on the market. I would look towards the labor market release next week, uh, for some relief if it's going to come in good. If it comes in bad, guys, listen. If the labor report comes in bad, there could actually just be a very quick capitulation, right? There very well could be, and it could correspond, to to these ideas we've been talking about. But I'm just saying, right, if the ETH pattern continues, it means that ETH stays red for this week and it stays red next week if that pattern continues, right? Sort of that 2-week drop after the 2-week rally. And we're just in week 1 right now. So that's sort of what I'm thinking. But I'm gonna go ahead and wrap it up, guys. I do appreciate everyone tuning in and please subscribe, give the video a thumbs up, and I'll put out a video before too long, sort of going through cycle theory and whatnot. But we'll wrap it up there. We'll see you guys next time. Bye.